All right, let's dive right in. Today, we're taking a close look at EnGro Corporation's latest annual results. And let me tell you, it's quite a story, a really dramatic financial turnaround. We're going to break down exactly how they pulled it off using their own numbers.
So, let's start with the headline number, the one that makes you do a double take. For the 2025 financial year, EnGro's profit for its shareholders skyrocketed by more than 1,500%. I mean, that is just a massive figure, and it immediately makes you ask,
How does a company that mainly sells building materials get a result like that? Was it some kind of construction boom, a brilliant new strategy, or was it something else entirely? Well, that's exactly what we're here to figure out.
Here's how we'll walk through it. First, we'll look at the sheer scale of that turnaround. Then, we'll pinpoint the real growth engines. After that, we're going to check on the company's overall financial health, see what's on the horizon, and then wrap it all up with the key takeaways for any investor watching.
Okay, first up, that stunning turnaround. We are talking about a jump in profit from just over $1 million Singapore dollars to almost 18 million in just 1 year. And this chart just lays it all out, doesn't it? Look at that little bar for 2024 and then boom, look at 2025. A leap like this isn't just steady growth. It tells you something big happened, a major shift in the business. So what was it? Let's dig in.
All right, Section 2, the growth engine. This is where we get into the how. What exactly was firing on all cylinders to drive these incredible results?
So what's really fascinating here is that this table tells two completely different stories. You see, their main business, cement and building materials, had fantastic growth. Revenue shot up almost 37%. But look at their smaller specialty polymer business. It actually shrank by nearly 18%. So it's pretty clear where the growth came from.
And the company spells it out for us right here. The engine was just really strong demand for their cement and concrete. You can picture it, right? All the major construction and infrastructure projects happening in Singapore and Malaysia really fueled this growth. But that's only part of the story. And honestly, it's not even the biggest part when you look at where the profit came from.
To really get it, we have to talk about something called a net fair value gain. Now, don't let the jargon scare you. It's pretty simple. This isn't profit from selling cement. It's an on-paper profit a company makes when the value of its investments goes up. Kind of like if you own some stocks and their price goes way up, you're richer on paper even if you haven't sold them yet. And here is the absolute key to this whole story. Of that $17.9 million in profit, a massive $13.8 million of it, that's about 77%, didn't come from selling things. It came from that on-paper gain on their tech-focused venture capital investments. So yeah, EnGro isn't just a building materials company, it's also a pretty savvy investor. And in 2025, those investments looked really, really good on the books.
So now we know where that big profit number came from. But profit is just one part of the picture. So let's look at the company's overall financial health. A huge profit is great, but a strong balance sheet is what really gives you that long-term stability. And the first thing that really jumps out is their cash. EnGro finished the year with over $68 million in cash and cash equivalents. I mean, that is a seriously strong cash pile. It gives them a huge safety net and a ton of flexibility for whatever comes next. Taking a step back and looking at the whole balance sheet, you see a company that's growing. Total assets are up, which is exactly what you want to see. But it's also really important to notice that their total liabilities, their debts, have also gone up by a fair bit. Now, that's not always a bad thing. It can happen when you're growing and investing, but it just gives us a more balanced picture of where things stand.
So what's next? What does the future hold for EnGro? Let's take a look at the opportunities and the risks that the company itself is seeing on the horizon. On the bright side, construction demand in Singapore, which is their home turf, should stay pretty solid thanks to big government projects. They're also seeing some good growth potential over in southern Malaysia, and hey, even for that struggling specialty polymer segment, they think the car market in the region could provide some stable demand.
But it's not all clear skies ahead. The company is dealing with some real-world headaches, like clogged up ports and high shipping costs, which can really squeeze their profits. The construction scene in China is still pretty weak, and that specialty polymer business just keeps getting hit with intense pricing pressure.
Okay, we've covered a lot, so let's boil it all down. What are the most crucial things for an investor to take away from all this? Here's your 5-minute summary.
Here are the 5 big takeaways. First, the main business, the building materials, is doing really well. Second, and this is so important, that massive profit spike wasn't from operations.
It was mostly from those on-paper investment gains. Third, the company is sitting on a big pile of cash, which is great. Fourth, the future looks okay, but there are some significant risks to watch out for. And finally, number 5, and this one's interesting. Despite that huge profit, the company is actually proposing a smaller dividend than last year, 4 cents per share instead of 5. Now that might mean management is being cautious, maybe holding on the cash to handle those risks we just talked about.
This content is intended to serve strictly and only as an informational, independent, objective summary of recent events and should in no way be interpreted, construed, or relied upon by any party as inside information or financial advice.